The global energy crisis has been a developing theme ever since the Russian invasion of Ukraine in the beginning of 2022, and the impacts that this has had on the global energy markets cannot be overstated. The aftermath of the energy crisis will have a profound effect on energy markets for years to come, and we are already starting to see shifts in different countries' approaches to energy because of it. In particular, I believe the crisis is having a unique effect on uranium and nuclear power generation, and could potentially lead to a future bull market for uranium stocks. In order to fully understand the impact that the energy crisis will have on nuclear power and uranium stocks, though, it's important to first understand the magnitude and scope of what's currently happening with the energy crisis. Russia is one of the world's top 3 crude oil producers, and in 2021, it exported an estimated 4.7 million barrels per day of crude oil to other countries. This has put the energy markets into turmoil in the aftermath of Russia's invasion of Ukraine, with Western countries issuing sanctions aimed to cripple Russia's energy industry, which contributes tons of revenue to the country, making up 45% of Russia's federal budget in 2021. However, the reality is that Western countries can't completely stop importing energy from Russia, as many Western countries rely on them heavily for energy imports. This is particularly true for European countries that rely on Russia heavily for energy. According to the International Energy Agency, quote, in 2021, the European Union imported 155 billion cubic meters of natural gas from Russia, accounting for around 45% of EU gas imports and close to 40% of its total gas consumption. End quote. Russia has been attempting to use this energy dependence as leverage against Western sanctions. Russia just recently halted all natural gas flows from the Nord Stream pipeline indefinitely, which is one of the main pipelines used to supply Europe with natural gas. This indefinite halt drove European natural gas prices up 30% in a day, and left prices up about 400% higher from just a year ago. To make matters worse, there's not really a short-term solution to the energy supply problem either. As you can see from this chart, the world's energy mix still is dominated by fossil fuels, with oil, coal, and natural gas being the 3 primary energy sources for the world, with renewable energy sources making up just a tiny fraction of the mix. There simply isn't enough renewable energy infrastructure at the moment to cover the world's energy needs, and there won't be for some time, meaning that the energy crisis will continue for the foreseeable future if fossil fuel supply remains constrained. There has also been years of dwindling oil and other fossil fuel investment, as the world aims to transition away from fossil fuels to renewable energy, with oil investment falling 45% following OPEC's stance against US shale between 2014 and 2016, and then 30% following the COVID-19 pandemic. According to International Energy Agency data, investment in global fuel has been halved to $680 billion in 2020, from $1.3 trillion in 2014. A Goldman Sachs analyst noted that OPEC's spare capacity is largely gone at this point, and it only has a remaining production capacity of approximately 1 million barrels per day of oil. And OPEC's 2023 base case scenario sees a 300,000 barrels per day oil supply deficit in 2023. This is where nuclear power and uranium stocks come into the picture. The chaos in the energy markets from the energy crisis and the global over-reliance on Russia for fossil fuel energy supply has made it clear to countries that they need to diversify their energy mix with both different energy sources and different suppliers that they're importing energy from. These needs have shown an increasing demand by countries for both uranium and nuclear power. Japan recently announced that nuclear power will be key for Japan's energy needs and security going forward, as the country targets carbon neutrality. Because of this, Japan announced that they have secured 10 nuclear power plants for reactivation and are working towards reactivating 7 more next year. Japan's Minister of Economy, Trade, and Industry noted that, quote, if Japan reactivates one nuclear plant, it produces 1 million tons worth of energy, making it possible for Japan to have secure energy and potentially be self-sufficient, end quote. And he also noted that the energy market was tight and that, quote, the price of natural gas and the price of energy are soaring internationally, end quote. Japan is even considering building new next-generation nuclear power plants as well. Up until the nuclear accident in 2011 of the Fukushima nuclear power station after an earthquake and tsunami hit, Japan had been one of the larger users of nuclear power in the world. So this reactivation of their nuclear energy programs is huge news. There's been a big push for nuclear energy in Europe as well. Perhaps the biggest indication of this is the European Union voting to recognize some forms of nuclear energy as being green, which was a massive bullish development for uranium stocks and the future of nuclear power. France, which is a leader in nuclear power, had their president calling for building 14 new nuclear reactors to aid in the country's transition from fossil fuels, and he also wants to extend the lives of the country's existing nuclear reactors. In July, the UK also approved construction for a new nuclear power plant. Countries that had been planning on phasing out their nuclear power plants, like Germany and Belgium, are now considering extending or have extended their nuclear power plants in the wake of the energy crisis hitting Europe. This increased demand for nuclear power and the need to establish energy security presents an interesting opportunity with uranium stocks due to the mechanics of the uranium market. Ever since the Fukushima nuclear disaster in 2011, uranium has been in a prolonged bear market as Japan stopped using nuclear power and other countries planned to join suit and decommission their reactors. This overnight collapse of future uranium demand meant that there was a sudden oversupply of uranium in the market, which drove uranium prices down fast. Many uranium mining companies went out of business because the lower uranium prices prevented them from operating profitably. Today, the uranium space has consolidated a lot during this prolonged bear market, and there are much fewer suppliers than there were in 2011. As you can see on this chart, though, world requirements for uranium have remained relatively consistent all throughout the 2000s. However, uranium production has been steadily falling since 2015 and is not enough to meet the world's uranium requirements at all. This creates a bullish situation for uranium stocks and uranium prices in general. In order to incentivize new uranium supply into the market to meet the global demand, uranium prices will need to rise in order to make it worthwhile for uranium suppliers to increase their production. This undersupply of uranium that has been created due to the lengthy uranium bear market has reached a point where there's no longer enough supply to meet the demand. When you then combine this with renewed uranium and nuclear power demand from Japan and other countries in light of the energy crisis, this is potentially a fundamental catalyst for a uranium bull market and would bode well for uranium stocks. Cameco, which is the world's largest publicly traded uranium stock, noted in their second quarter 2022 earnings that the uranium market fundamentals are very strong right now, and that leverage is shifting from uranium customers, like it has been for years, to uranium producers. As the long-term contracts that uranium customers negotiated in the past begin to expire, they will have to negotiate new long-term supply contracts for their uranium facilities at higher prices due to the low uranium supply and lack of uranium investment the past decade. You can already see how this is taking place in this chart from Cameco's earnings report, with the uranium spot market price being up 79% since 2020 and the long-term price being up 37% since 2020 for uranium. Due to the bullish fundamentals in the uranium market with low supply and renewed demand and interest in nuclear power due to the global energy crisis, uranium stocks have an attractive bullish scenario where they can appreciate over the next several years as the uranium market fundamentals continue to improve. But be sure to let me know your thoughts on uranium stocks and the energy crisis. And leave a like on the video and subscribe to the channel for more investing and finance content. Thanks.